I'd like to correct a major falsehood foisted on traders. Look, trading is challenging enough without this misinformation being spewed and spread to the trading community. Often you hear about, quote unquote, the way traders ought to be making money, the stocks that traders should be trading, the quote unquote, the way traders should be trading. In this video, we take a shot at this misinformation so that you properly and deservedly value any edge, and in any kind of stock that you develop as a trader. If you want an eye-opener on one way professional traders make money to help you improve your trading, and perhaps a way you never thought about, stick around as you're going to enjoy this video. Hi, I'm Mike Bellafiore, co-founder of NBY Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade in the Playbook. Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. In this video, you're going to learn about how you can make serious money in stocks that perhaps you've never heard about prior. You're also going to learn the stock and trade that brought one of the best trades of the week for our firm, how to use Arval to confirm your stock selection, our SME challenge to you in this video for your trading, how to make more in your best trades, a technical indicator, one of which one of our firm traders uses for exiting a winning trade, and as always, the biggest reward from videos like this for you in the trading community is how to think through trades like a pro. For those of you who want to learn strategies employed by some of the top traders on the street, watch this video. If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up the free registration page in a new window. Don't worry, you're not going to lose this video. You can also visit tradingworkshop.com to register for this free, intensive, awesome workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So we're going to go over trade in NBY. It's a low float on its second day.
All right, so I want to make a couple points here. Lesson number 1 from this trade example is you can make a lot of money in stocks that no one knows about. This is one of those stocks that no one knows about. And I promise you that we will all forget about this stock in 2 weeks. Joseph, if you start reminding me of this trade in a couple of weeks, I'll be like, what was the symbol? You will probably remember it, I won't. You don't have to trade the FANG names or the high beta stocks to make real money, and we'll show you that here. Second lesson from this and point I want you guys to take away is study, study, study. Study, study, study your winning trades. This is a contender for trade of the week. This little itty bitty stock, this insignificant thing that nobody knows about. I'm sure nobody was talking about this on cable news. Nobody was writing about this in the Wall Street Journal. And it really offered a tremendous amount of opportunity. Specifically, where could you have added more within your trading system? When you see a good trade or you make a really good trade, you have to go back and specifically push yourself as to where you could have been bigger. The idea is specific, 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 specific. Don't just go back and say, I should have been bigger, oh, I should have been bigger. If I was 3 times as big, I would have had my month. That doesn't help. And don't say, I would have been 4 times bigger and it be outside your trading system. If you really wouldn't have been 4 times bigger and you couldn't have been 4 times bigger, don't say that. You know, within what you're doing now, where would you have been bigger, and then take the next step further, which is where would your stop have been? It might not have worked out. All right, where would you put your stop when you got bigger, and what would your target have been if you were right, if you got bigger, and that needs to be within your trading system. Mentally rehearse trading these opportunities bigger. when you see something that works, that's a huge thing, no matter how small that edge is. Now, no matter how itsy bitsy, teeny weeny this stock is, which we're definitely not going to remember in 3 weeks, you want to study, and push yourself to make more in it.
So here's a big picture on NBY. This is a 4-year daily chart. So you can see the past few days it's been doing the most volume it's pretty much ever done in the history of the stock. So intraday fundamentals, what happened? So shares of NovaBay Pharmaceuticals more than tripled in a very active pre-market trade on day one. The stock rocketed 262% on volume of 1.1 million shares to make it the most actively traded it has ever been ahead of the open. NovaBay's eye care product called Avenova is designed for removal of microorganism and debris, which typically leads to gland dysfunction and dry eyes. The company said Monday Avenova will start selling on Amazon at a price of $30 and without a prescription. So the stock went from trading 33 cents a share on Monday morning to a high of $4.78 on Tuesday in the pre-market, a 1,348.5% increase, adding $33.3 million to its market cap. And hypothetically speaking, to add that to their market cap, they would need to sell more than 1 million bottles of their eye drops. It's just unreasonable for the stock to be trading up there. So it's safe to say that many traders were looking for the short on day two once the stock showed us a change in character or a shift in momentum.
Yeah, and there's, for the young guys in the room, it really doesn't matter what day it is. On day one, we're going to have strategies to attack stocks like this. Day two, we're going to have strategies to attack stocks like this. Day three, day four, we're going to have a different mind shift and strategy shift as to how we're going to trade stuff like this. So on day one, we're going to be more cautious to short something up, even though it's up 262%, because they've struck a deal with Amazon. And even as much as we can sit here and laugh at how silly that is, we're just not going to be as aggressive on day two and on day one. And day two will be likely to be more aggressive than on day one, and on day three we're going to be more aggressive than on day two.
So here are the intraday fundamentals. Volume 31.8 million shares, average volumes around 100,000, R vols over 200.
That is the highest I think we've seen since your class has been doing these playbook trades, right? I don't remember something. Ryan, you remember anything above that?
We had one that was like.
There was
80s.
one.
I think it was in like the 80s. I can't remember what it was.
ABTH was like, that had a lot of money.
Rotated its float like 1,000 times or something like that.
Yeah.
This is up there then?
This is up there with one of the biggest we've seen.
Yeah, float's 7.5 million. So here's just a look at the 5-minute chart on day one. Basically, you can see that when limit up a couple times, when limit down, and
We
then
should go back. Let me just go back for the younger traders. So R vol is a really important indicator, and what it is a measure of is how much more volume the stock is doing today relative to how much it normally does on average. So we want R vol to be elevated. We call it elevated. We want to look for stocks with, it depends on the stock. If it's a large cap stock and the R vol is above 1, that could be enough. With a low float like this, you're going to see R vols a little bit elevated. What R vol tells us is that the stock is really in play. And when R vol is 3 or greater, and we prepare for an idea, and then the R vol is 0.8, that's telling us our idea isn't as good as we thought in the morning, because the volume is not participating. When we think a stock's going to be in play, and then R vol is 3 or 4 or 5 or 200, or greater than 200 in this case, the rest of the marketplace agrees with us that this is a good idea, that this is a stock in play. Make sense?
Yeah, so here's day one. You see that it's pretty much trading above VWAP all day, when limit up a whole bunch of times. You can short it. There are ways to short it, but those are like very advanced trades. And you're kind of looking for the easy trade, especially if you're a new trader. here's day 2, and here's the trade management of, how I think the best way would be to trade this. So right off the open, the first move is down, which is already a change in character. I know a lot of traders were looking for a pop to short, but it's kind of showing us weakness right off the open. So it comes up and it tests VWAP, and it can trade above VWAP. So another clear change in character, and you would want to short tier 1, risking against the wick high above VWAP. So NBY has some support at $3.50, but we notice it grinding lower, and it's getting tighter and tighter. So the odds of 350 breaking increase, and you would want to add tier 2. So NBY consolidates below 350 and grinds lower into $3.30. 330 has some support, but the pattern gives us conviction that this will break, and we add tier 3. It's kind of interesting that we're seeing a low float kind of have this methodical selling, and it's just grinding down lower and lower, and that's I feel like that's a rare pattern that we don't really see too often. So it kind of gives you conviction that the stock is weak overall.
Yeah, when it's making new lows, you want to see what happens when it starts to trade back up. And when a low float like this, that's been up a bunch, makes new lows, and then starts to trade back up, it doesn't really go up much. That's a sign of real weakness, or a really big trap coming, but which is fine. But in this case, you want to watch those up moves. When it's slow and dead and there's not much interest to buy it, you have the bag holder longs, the people that are out of the money long, that are increasingly more in trouble. And just in general, when a characteristic of a stock that's weak is it's making new lows, and then when it starts to trade back up, can't really go up very much. It means the buyers just aren't interested here. Makes new lows, can't go up very much. When I see that, I'm pushing and pressing my short position. It's working. I'm going to keep pressing until something changes.
Yeah, and something else I noticed, I like to have EMAs on my chart. They're not for everyone, but it's just something that makes sense to me sometimes. So you can see the dark blue EMA, which is the 9 EMA. The stock never trades above it. So to me, that's showing that momentum's clearly to the downside.
And you're using that as a trend indicator, right?
Yeah.
This is consistently holding below a trend indicator, which is confirming weakness. And you're not looking to exit your position until it starts to cross over some of your trending indicators.
Exactly. It's not something I'm making trades off of. It's something that's helping me with the trend.
You're using it to manage your position too, right? As for your exits?
Yes. So once 330 breaks, the stock goes limit down. You can see that here. And you want to cover when the stock opens. And you want to hold at least half of the position for a move lower. So basically, once the stock goes limit down, there's still longs that are trapped. And I feel like once longs see that, they're going to panic out of their longs. It's at 260 right now, and it's important to remember where the stock has come from, and there's still a lot of meat on the bone. So the whole move started at 33 cents. But naturally, you want to cover into some of these dips, but you still want to leave most of your position on. And so here's just a 15-minute chart. So it reaches new lows almost 2 hours after the stock went limit down. So it kind of takes a break, but it's still holding lower. And then the next day, it gaps down into the pre-market, and it trades lower in the morning. So this is kind of something that you want to think about having a swing position in. And it's working so well. So I feel like there's never a point in covering your entire position when something's working like this.
All right, good.
So you said this is a point of a swing position after this 2-day lows. Can you explain that further?
Why it's a swing?
Yeah.
Well, first, you notice that it has this up move and it's very strong. And then basically this confirms the backside on day 2. Now you have a whole bunch of longs that are trapped. So anyone that's pretty much bought above $2.20, they're going to get shaken out, and the fact that the stock went limit down, it kind of shows that it's dying out. And the stock has come from 33 cents all the way to almost $5 on kind of insignificant news, and it shouldn't be trading that high. So naturally, the stock should kind of pull back to where it's come from.
It's not indicating yet that it's ready to stop going down. And there's still a lot of room between where it came from.
I
think it's
people on the desk as
positive.
well were thinking that they really need money. They only had like a few million in cash, and there's high likelihood of an offering at some point.
This is a really good example of why you want to study the heck out of your best trades. I mean, this is an itsy bitsy little stock, and based on P&L, it's one of, until today, it's one of the biggest P&L drivers for the entire desk this week. There are guys who made really, really highly profitable trades on this day in this particular opportunity. So good example of how you can make money in some ways that maybe you didn't know about before you showed up here. SME challenge for those of us in the room and those watching at home: study the heck out of your best trades, or study the heck out of the best trades you could have made. So maybe you see somebody on the desk make a trade that you didn't make. It's okay for you, and it was a great trade. You know, this was one of the better trades of the week, but you weren't in it. You don't want to say, oh, I can't playbook that trade, oh, I can't study it because I wasn't in it. Go talk to somebody who was in it. Go back and decode why it worked and how you could have traded it so that the next time that you are in it. All right, and if you were in it, go back and do the same so that you're in it bigger. Be specific, be specific. So if you're in it and you're mapping up this playbook trade and you're thinking about how you could have traded it bigger, be specific, be specific, be specific about where you could have been bigger within your trading system, what your specific stop would have been for your added size, and what your target would have been for if you are right. Okay, it is key to make more out of your best trades. We all have individual strengths, cognitively, intellectually, and with our personalities. And we're all going to gravitate towards niches that augment what those unique talents, our cognitive, our personality, our intellectual interests are. And from that, we really have to push ourselves to make more. You know, if you didn't make enough in this particular opportunity, you saw how clean that was, you got to push yourself to make more. It's not enough to make a little bit in an opportunity like this. And that makes the difference between the guys that are good and the guys who are great. The great traders, when they see it, they are super aggressive. When they see their opportunities in their best setups, they just go for it. They strike. Their mindset is not on, oh, I may lose in this trade. Their mindset is, this is my trade, I see it, this is a huge opportunity, it's risk on. I'm in. I need to have whatever my max size is, whatever my max risk is, in my best setups, I need to have it on right now. I have to go for it. That's what great traders do. If you're not big enough in your best trades, you've got to get to the point where you are. Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comment section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.